Today's lesson is about taxes in retirement and looking forward to a retirement where you're not just paying a whole bunch of taxes and you have more of your income that's available for you to spend and enjoy and live off of. So what I want to talk about is that most folks coming in to see us, their frame of reference is the CPA, the tax return, the tax filing, their net check that they get every 2 weeks or twice a month from their work, and they only see 55 to 60 cents on the dollar, and that goes on all year, and then they file a tax return, or a CPA does that for them, and they get a refund, or they owe taxes, and they have tax deductions, and that's all backwards looking. It's very precise. I mean, when you have a CPA, when CPA is doing my tax return, they're very precise, and I want them to be precise. And a lot of folks really think perhaps that's what we do. And we actually, I have a CPA, I'm a CFP, or a certified financial planner, and really capable of doing my own tax return, but I have my own CPA that does my taxes for me. So I don't want to diss any of this. This is very important, but it's also backwards looking. It's already happened, and we're just calculating the tax we owe. So what we're talking about today is what a financial planner does, what a certified financial planner, a CFP, does when you're before retirement, at retirement, or even in retirement. There's a lot of folks blow right past 65 and they get retired and they don't do a lot of this planning. We can help people that are 73 years old a lot, and we can make 73 to 90, a whole lot better tax-wise. So what we're talking about here is tax planning, and that's really about the future. Like for somebody that's coming in today, we're planning out income taxes from 2021 to 2030. We don't generally like to get more than 10 years out, because every year you go out, the less precise that it is. So where this is precise, this is an element of guesswork, of projections, of, we like the current Tax Cuts and Jobs Act that went in 2017 that lowered tax rates substantially. It's going to sunset in 2025. If Congress doesn't act to change the law, tax rates in 2025 are going to go back to what they were before the tax law. We don't know what they're going to do. So this has an element of guesswork, but just because it's not precise doesn't mean you don't do it, because there's big rewards for planning this out properly. So tax rules change. They're going to change. They're constantly changing. And generally, they put in grandfather provisions for financial planning that you've already done. So, but the tax rules and tax laws and tax rates and deductions and all that kind of stuff, that's going to change over time, but we still can predict things and try to get you a low tax or a tax-free retirement. We have to monitor the progress, and obviously if we put together a plan now and then they change in 2024, well, then we're going to sit down and we'll make some adjustments then to try to make it the best that it can possibly be. Now, what we're doing in this is we're looking at your whole financial picture. So if we're going to try to affect what your taxes that you're paying in future years, we're going to implement some things for you, or suggest you implement some things like a Roth IRA conversion, okay? And so what that simply means is that your regular IRA, that's before tax dollars. I mean, you've never paid tax on that money, and when you start drawing it out in retirement to live off of it, you're going to pay income taxes. So there's an alternative to that where we could sit down now and we could put together a Roth conversion strategy so that you would pay the taxes on that now, maybe a little bit at a time. Maybe we'd spread it over 5 years. I just had a client in last week that said, can I do this all at once? Can I take the whole IRA and convert it? And I said, yeah, you can. I don't really think you want to do that. At the very least, we'd like to straddle it over 2 years, do some in 2020 and some in 2021. It's going to be 2021 in just a few months. But so in this tax planning, we can actually plan out like what your income is going to be and how much taxes you're going to pay on that. And a big factor in this whole thing is Social Security, because Social Security isn't taxed on its own. If all you got is Social Security, you're probably not watching this video, but if you have Social Security and all you have is Social Security, you're not going to pay any taxes. It's tax-free. But the taxes on Social Security are based upon the amount of other income that you have in retirement. So Roth IRA strategies, life insurance, and a loan strategy of pulling the cash value out tax-free are all ways that you can really make your retirement low tax or no tax. So, just today we wanted to make the comparison of how this is different than this, and you really need both. And this gets fairly easy in retirement if things are set up properly, is at filing your tax returns every year. Now, I'm Hans Scheil. I've written a couple of books on these subjects. You can get those at our website, cardinalguide.com. I thank you for listening.